Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis. Asian stocks posting a small gain as optimism over big AI spending under President Trump is offset by his revival of China tariff threats. The competition to buy TikTok heating up. Trump says he's backing billionaires Elon Musk or Larry Ellison, but the internet's top creator, Mr. Beast, has also joined the race. And we'll be speaking in a moment with Shark Tank's Kevin O'Leary, who's been pushing to buy TikTok long before these potential new challengers. And as the Bank of Japan heads towards a rate hike, we discuss what that means for the regional real estate market with Knight Frank's head of APAC research. Japan away on the lunch break right now, but of course, really markets trading on headlines, especially when it comes to Trump's AI push and all of this tariff talk around China, Mexico, and Canada. Avril Hong has the latest on the markets. Avril.
Yeah, absolutely, Sherry. I mean, when it comes to U.S.-China relations, it's about tariffs. It's also about some of this strategic competition in key sectors. And AI is seen as sort of this next frontier. So Trump really wasting no time in trying to ensure that the U.S. maintains its lead on China for this sector. And we've seen how, he's unveiling this joint venture, which will include these massive AI infrastructure spending from the likes of Oracle, from SoftBank, OpenAI, and we will see potentially these lower guardrails than during the Biden administration. So that's helping to fuel some of these Asia AI-related stocks, including SoftBank, that entered the lunch break with gains the biggest since August earlier last year. Now, what's really going the other direction, as you know, are these Chinese stocks. And if you take a look at some of these benchmarks, I think it's really interesting to see how after a pretty positive run and a surprisingly warm start to U.S.-China relations under Trump, they're kind of snapping their winning streak after Trump's talk about how these China 10% import tariffs on all the China imports are still on the table. So we've seen the CSI 300 negative today and looking for its first decline in 5 sessions. You take a look at this chart, if I can just bring it up as well to put things into further perspective for you. The MSCI China, that's been underperforming since Trump's election win. So this idea that Trump has already been this key driver for markets and likely will continue to be, and the idea as well that, these volatility spikes we're seeing could be a common feature over the next 4 years, Sherry.
A lot of volatility in the currency space, definitely with the dollar rebounding from that biggest fall in 14 months. I mean, right now, markets trying to assess where yields go from here, how inflationary his policies could be. What are we seeing across the currency space?
Yeah, Sherry, I mean, the dollar reversal on Monday was really interesting, right? As it took that step lower, but, analysts had already pointed out that it was a really crowded trade. So perhaps, not just being driven by these Trump headlines or the lack of mentions of aggressive tariffs on day one. So a bit of reassessing. Also, the backdrop given Trump's, policies on energy and how that might change the inflationary picture, traders were certainly reassessing what it comes to the expectations or what this means for the Federal Reserve eventually later in the year. So the dollar, I think, recouped some of that lost ground from Monday, but we're seeing how that specter of how tariffs could still very much be on the table, particularly for China. I think that's prompting this weakness in Asia FX today, including on the Japanese yen. And this is despite these expectations that the BOJ will certainly heighten or tighten its rates on Friday. Indeed, we got that reporting from local media, right? Kyodo News earlier today, Sherry.
Yeah, Avril Hong there with the latest on the market moves that we're seeing right now as we head towards that BOJ policy decision, of course. And we've been following the latest on President Trump when it comes to the sale of TikTok. Of course, we continue to watch that deadline. President Trump says that he would be open to billionaire supporter Elon Musk or Oracle chairman Larry Ellison buying TikTok as part of a joint venture with the U.S. government. For more, let's now bring in Min Lo on the latest on TikTok. So what sort of changes could we see for this app? Of course, millions of users worldwide, but right now the focus seems to be squarely on whether or not they get this outright ban in the United States.
Yeah, it's really complex at this point how that final deal would look like, because having the U.S. government be part of this deal would complicate matters somewhat. Because remember, in the first administration, when Trump was in office, he tried to facilitate the sale of a big stake of TikTok to Oracle at that time, and he wanted the U.S. Treasury to get some of the proceeds of that sale. But of course, that wasn't possible. And this time, he's also wanting this sort of joint venture between some sort of private venture with the U.S. government involved as well. So not too sure how this could turn out, but Trump obviously saying that he's open to Elon Musk being a part of it and Oracle as well. Both Oracle and Amazon has been floated as potential buyers, given that they already work with TikTok. Other mega caps like Meta, for example, Google, for example, these two companies have already been mired in antitrust lawsuits, so they're not likely to be potential buyers. But there are other people as well coming out of the woodwork here, expressing interest to buy this app that is valued at about $50 billion. You have Kevin O'Leary, Frank McCourt, the billionaire investors willing to buy this app without the underlying algorithm, which has been banned or placed on this export control list by Beijing. And there's also Mr. Beast, that is the most followed and the highest earning internet content creator, who is joining a group of other investors made up of high net worth individuals who are willing to put in a cash bid for TikTok as well.
Given the complex landscape right now, whether it comes to bidders or just the format of a potential deal, how likely is it that we're going to get an agreement within those 75 days that TikTok needs to make this transition in order not to be banned in the U.S.?
Well, first of all, a big factor is whether TikTok would even want to sell the app, because they have expressed no intention to sell the app so far. There's also the Chinese government who is involved. And of course, this also plays into the bigger sort of trade negotiation between U.S. and China, TikTok becoming the bargaining chip here. Possibly, well, we don't know whether TikTok will be sacrificed as part of the deal in exchange for maybe lower tariffs on Chinese trade, Chinese goods. So that really complicates matters here. But some analysts are saying that there is no reason for China to block this deal, given that, first of all, it would be a big win for Trump if he can orchestrate this deal. For President Xi, it would be a relations win for him. And of course, the national security concerns around TikTok has also been a focus. And there are questions around whether this forced sale would actually address some of these concerns if it's not a full divestiture and only a 50-50 venture. But some are also saying that the Project Texas, there was a restructuring proposal that TikTok had submitted to the Biden administration previously. It was rejected by the Justice Department at the time, but TikTok went ahead to implement a project to ring-fence U.S. data on U.S. soil. Some say that already addresses some of the national security concerns. But of course, many factors to consider here. And given Trump's tendency to change his mind, sometimes it's hard to say, because I remember when he was signing the executive order, he was saying that Elon Musk was too busy sending rockets into space to be able to help execute this deal. So now he's open to Elon Musk being part of it.
Bloomberg's China correspondent Min Lo there. And of course, another bidder right now for TikTok is Shark Tank's investor Kevin O'Leary, and we'll be hearing from him next. Plenty more ahead. This is Bloomberg.
I would be if he wanted to buy it, yeah. I'd like Larry to buy it too. I have the right to make a deal. So the deal I'm thinking about, Larry, let's negotiate in front of the media. The deal, I think, is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit.
President Trump there speaking about the potential sale of TikTok from parent company ByteDance. Joining us now is someone who has been in the hunt for TikTok longer than most. Shark Tank investor Kevin O'Leary made a formal offer to buy TikTok earlier this month. Along with billionaire Frank McCourt, O'Leary had even met with President Trump at Mar-a-Lago. He joins us now. Great to have you with us, Kevin. First of all, what do you think of this new competition?
I think there's a lot of interest in TikTok. It's a really interesting asset. We know from the court order that has been issued both by Congress on a bipartisan basis, and then most recently, just a week ago, by the Supreme Court in a unique 9-0, very definitive decision, where they further defined the issues and the decision around non-use of any Chinese algorithm. So whoever the buyer is, they have to provide a new tech stack, completely new tech stack, because the Supreme Court order does not allow for the use of the algorithm. So a lot of these bids make the assumption that they're going to fork the code, as it's called, or form a joint venture with China and remove any of the spyware. That's not going to be allowed. It's prohibited by the Supreme Court order. So there's a lot of speculation, and I understand that. There's in a void of information, you're going to get speculation, but you have to go back to the original order and the new Supreme Court judgment to determine what you can actually do. And so if you're going to buy TikTok according to the rules of Congress and the Supreme Court, you're not buying the algorithm. And so far as I know, the only offer that's been made to the company, banker to banker, is the McCourt-O'Leary offer that specifically dictates that we will not buy or require the algorithm at all. Not one single line of the 5 billion lines of code. We cannot buy it, we don't want it, and we won't purchase it as per the order of the Supreme Court.
And your bid is $20 billion in cash. You think that TikTok is worth that even without that algorithm?
Well, the math is, obviously there's going to be flexibility in pricing, but the secondary market right now for the entire TikTok, and there's been blocks of stock trading on the secondary markets, about $230 billion. TikTok US represents about 8% of the aggregate global TikTok. So the numbers come in sort of around the $20 billion number. That's what the market's paying right now. And that includes the algorithm. So we're purchasing without the algorithm. So we think that's a reasonable offer. And, there'll be lots of other speculations, but at the end of the day, the company has to abide by the order of Congress. And if it's going to stay on in the United States, has to divest itself out of Chinese control.
When you're saying there's flexibility in price, are you thinking that perhaps you could up even that offer given the new competition, or given that the competition is not necessarily considering not offering or not taking the algorithm, that you'll actually not have to compete that hard?
Well, we're just looking at the price that the stock actually trades at. So, I think, deciding what the final price is total speculation as well. Anybody can put any price out they want, but the last time these shares traded, it was around a $230 billion market cap. So, this is not rocket science. Anybody can see it as public information. So we think the price is around $20 billion for TikTok USA, particularly when you have to rebuild the tech stack from scratch. That's a fairly expensive endeavor on its own.
You've already spoken to President Trump. What are the conversations like right now? What do you expect to see, given that we have heard him talk about Elon Musk, talk about Ellison as well? Ellison, what does that mean in terms of also sources telling us that potentially China would like Elon Musk to purchase it?
Yeah, listen, I think there's a lot of speculation. I would imagine Elon Musk would run into antitrust issues because he already owns X, or formerly TikTok. Larry Ellison and Oracle once owned a piece of ByteDance, I believe, and they divested of it already because they're a large service provider. They may want an arm's length transaction so they're not involved with the actual operating of the app. But all of these things are speculations. So, the only thing we do is we stay focused on our bid, the merits it has. We're not involved. We have no conflict of interest. We're not involved in an existing social media platform. And in addition to that, most of the revenue in TikTok US comes from small businesses that are basically Shark Tank companies. They all know me, about 7 million small businesses. I think I'm well trusted by them, and I've offered them a deal as well, saying, why don't you invest beside me in equity crowdfunding? I've set that up at wonderfultiktok.com. We're working with the Jobs Act. The first 75 million is available on a first serve, first come basis. So I think we have a lot of attractive elements to our offer, and certainly we're not conflicted in any way, and we have the cash. So, we'll see what happens. It's anybody's guess. I think it'll happen pretty quickly, though, because at the end of the day, the 270-day period ended, and so we're in an interesting space right now, waiting to see what happens. Perhaps this executive order will buy 75 days, but nobody really knows. That's not an option in the existing law, so we'll just see what happens.
Would your deal be able to make that deal within that timeline?
I think we could close it in 90 days. Yeah, and I think, it depends what lawyer you talk to, a congressional lawyer. We think that if an offer is signed back by ByteDance, it does trigger a 90-day period where the app could stay lit up while the parties negotiate final terms. That was in the original order that was passed by Congress on a bipartisan basis. A lot of what's happening now is kind of uncharted territory, because officially there is no option to keep it's actually technically banned, because as of midnight on the 19th, there was no sign back, and therefore there's no option to extend.
So what do you think of the structure that the deal could take as well, given that President Trump has mentioned a potential joint venture with the U.S. government? I mean, can you sort of give us an understanding of what the president might mean by 50% ownership by the U.S. government? And is that something that you could entertain?
Well, it's 100% Trump's deal. I mean, there's no question. It's now, in his administration. The law does not permit for that. So the law says, and maybe they'll change that law, who knows, but it doesn't provide for any partnership on the technology with China. Now, could China have a minority position, a non-control position? Maybe. That also has to be contemplated by Congress. At the end of the day, what's unique about this deal, there's an oversight from Congress to whatever agencies they deem. So they're going to be looking at these various offers and which ones they like that provide for national security. That's the reason TikTok's in this situation. It got to a place where Congress decided it was a national security threat and told China they had to divest of it. And so really, with the secret golden share structure of Chinese companies, that decision is Xi's alone, and he will decide what he's going to do, and that's a discussion he's having with Trump. Any bidder is going to have to work with whatever President Trump decides. So, if there's going to be a portion of this owned by the U.S. government or by the Chinese government, it will have to be under the law passed by Congress, unless they amend that law. But who knows? That's what I mean. It's a lot of these are unknown, and it's a very interesting transaction right now.
Of course, there's a dynamic of President Trump's backing here, but there's also the dynamic that Beijing needs to like the deal that they see. You've worked with Beijing for over 2 decades. What do you think will be appealing to the leadership there?
Well, they have an option. They can do what they did in India in 2020 and just shut it off. That's probably not that attractive an outcome, and I'll tell you why. China wants to be a part of the G7, G20, and certainly wants to grow its economy and attract capital globally like any large economy would. And so if all of a sudden you erase 20, 30, 40 billion dollars worth of value overnight just because you want to turn it off, that's probably not a great outcome for what the future fundraising of China looks like, because that means at any time another company, not necessarily ByteDance, the same thing could happen to you. So investors may take pause in investing in the future of China if that was to be the case. So I'm thinking that's a little unlikely in this case. There's just too much money on the table, and why give up whatever the value of TikTok USA is? And certainly you don't want to signal to other investors that you're happy to just shut it down and lose, whatever it is, 20, 30, 40 billion dollars. That's a tough pill to swallow. So, but I don't know what she's going to do. Nobody does. This is all speculation, and we're waiting to see. But really, it's a narrative between Trump and Xi that will determine how this works. Obviously, the company can't negotiate on its own, it looks like, because they don't hold the golden share that all Chinese companies have to issue to the CCP.
When it comes to the interests of the millions of TikTok users, why would your bid be better than others?
Well, we offer something rather interesting. We envision a different format in terms of data ownership. We're going to give the ownership back to the user. They will determine when and if they want to participate in advertising. And if they do, we're going to share some of that revenue with them. It's a unique format. So in other words, you would say, okay, look, I'm very interested in watches as I am. I wear 2 watches. I love watches. I like to be advertised every new model. I like to learn everything I can. I'm very interested in all that content. And if you're going to advertise watch companies and watch products to me, let me share in that income, which is a unique option. Secondly, we're going to provide interoperability with other social media sites. So if you're posting on X, you can populate everything we've got on TikTok. It's no different than in years past with telco companies. In the beginning, there were baby bells in the United States, and you couldn't actually call one person from Texas to California because there's 2 operators. And then when they passed the Telco Act, they allowed for the owner, the user, to actually keep their number and transfer it across different providers. We envision the same thing with this new version of TikTok on our tech stack, is to allow you to decide you own the content, you own your relationships, you decide when and if you want to monetize it, and you can move between social media platforms, just like you can move your phone number across different providers, whether it be Verizon or AT&T. Same idea for the new TikTok.
Given what you're telling us about the potential of TikTok and how it could evolve, I know that you've talked about $20 billion being the right number here, but how much higher would you be willing to go?
Well, that's sheer speculation. I mean, it depends on what the market is and what the deal looks like. Nobody's been in negotiations yet at all. It doesn't matter which, ours is the only registered bid so far that's on the table. There may be others, but we don't know what that deal is going to look like yet, and nobody does. So we'll just wait and see. But again, I'm just using public information of the last time the company traded shares, and you can buy ByteDance shares on the secondary market for a valuation currently of around $230 billion. And again, as I mentioned earlier, TikTok USA is worth 8%, so you kind of get to a $20 billion number. But it's a number, and we'll see what happens.
Right. Kevin, good luck with the negotiations. Kevin O'Leary, thank you so much for joining us, Chairman at O'Leary Ventures. And of course, as he's bidding for TikTok, we continue to watch tech stocks around the world. U.S. futures were really pushed higher with the AI sector exposed names gaining ground in the overnight session as well, given the investments that we're expecting to see in AI infrastructure in the U.S. Futures higher by 0.3%. Of course, we are seeing some hurdles also coming from the fact that we continue to hear more talk about tariffs on China, Canada, and Mexico. This is Bloomberg. Welcome back. You're watching Insight. We are headed towards the Chinese market's lunch break right now with the Hang Seng Index seeing its worst day in more than 2 weeks. The CSI 300 also losing 0.8% as we continue to hear more talk around tariffs and President Trump saying that he's considering that 10% tariff on China in retaliation for the flow of fentanyl from the country. So we had seen a little bit of a rebound on the U.S. dollar, and the other side of that trade, the offshore yuan, under a little bit of pressure headed towards that 730 level. Of course, we have continued to see the fluctuations in the offshore market, with the PBOC setting the yuan reference rate at strong levels in order to defend the currency. Take a look at the Japanese yen as well, that market coming back online from a lunch break. We continue to see weakness on that front as well, and the yen headed towards that 156 level, despite the fact that we continue to hear more sources telling us that we could see the BOJ hiking rates on Friday. The consensus call right now among economists that we will see that 25 basis point hike. On Friday, the Nikkei gained more than 1.5% in the morning session as well, and we're seeing it come back online with SoftBank pushing higher. Look at that, gains of about 10%, given the fact that we have seen a lot of focus on their AI infrastructure investment in the United States. Of course, overnight, we also saw that push higher when it came to AI-exposed stocks in the U.S. markets. Let's get to Linda Duessel, Senior Equity Strategist at Federated Hermes. As of September, their assets under management totaled around $800 billion. Linda, great to have you with us. So what will Trump policies in the next few months actually mean for broader equity levels, especially if we're talking about more investments into the United States?
Well, hello. Thank you very much for having me today. It's right now, I think the next number of months, you'll probably see animal spirits just rising here in the United States because of the pro-growth policies that Trump has proposed. And so, today we sit just 1% away from the all-time record high in the S&P 500, and investors have had a hard time trying to figure out how to price Trump presidency because there are so many unknowns as to what he would do and then what he could get accomplished. So that we're just really trading on where we think the earnings of corporate America will be and what we think the Federal Reserve will do. And we can be bullish just with those two concerns.
Are there any sectors of the markets that you would be particularly bullish where the Trump trade hasn't necessarily been fully priced in yet?
Yes. And of course, as I said, not knowing what will happen, they really aren't priced in that much. What we look at is a potential continued run in this economy. The economy's stronger coming into in the last quarter of 2024. Looks like it'll be strong going into this next year here. And so we're looking at cyclical stocks, the kind of stocks that do better when you come out of an economic recession, though we haven't been in one. They have been basically ignored or just traded up for a spell, reaching resistance and trading back down in favor of the big tech stocks. So that would include some of our favorites are financials, healthcare, industrials, some of those areas of the economy that really benefit from a resurging economic growth.
How much of a challenge could rising yields be, especially if we contend with bond vigilantes? Of course, we continue to see the U.S. debt pile that's just continuing to grow.
Well, the debt pile, of course, is truly, it's one of the biggest questions that I'm asked as I travel this country. And it's definitely a concern, but it's one of those concerns that you really can't try to handicap when the worst will come. And really, what I say to people on that score is, look at the strength of the U.S. dollar. As long as the U.S. dollar remains strong and is actually stronger than maybe President Trump would like it to be, that argues that we can continue to fund a growing deficit. Otherwise, the bond vigilantes will bid those bond yields up and prices down in the event they consider that they're going to worry again about inflation. And the last figure we got on CPI was actually benign. We at Federated Hermes don't believe that there will be a resurging inflation problem in this country. And so we don't think that if you should get to that magic 5% number, which would really get equity markets upset and really show bond vigilantes going at it on the 10-year, that would probably be a short-term hit and a buying opportunity in our view, because we just don't see it as a big problem this year.
But it's not just a rate environment, right? It's just the fact that we are seeing lofty valuations, especially when it comes to the tech sector. I mean, we are seeing these increased AI investments, but without any concrete application and products that investors can see right away. How much of a challenge will it be for these tech giants and even smaller tech companies to continue gaining ground?
Yeah, I mean, a lot of comparisons have been made to the internet bubble and when it burst back in 2000. That there is a big difference. I was there at that time and here today. The valuations, though they're not inexpensive, maybe 30 times, something like that, 35 times earnings just in general for the big tech group, they are expensive. They're nowhere near as expensive as they were back in 2000 when Cisco, which was one of the four horsemen back in the day, was trading at 200 times earnings, when we were counting eyeballs because there weren't earnings to count, maybe not even sales to count. Today, you have some extremely well-to-do companies selling to some extremely well-to-do companies. And AI, though, we're waiting for the productivity enhancements to really show themselves in full force. We can't say that we've not had any examples. You're seeing excellent examples already in the healthcare industry of diagnoses that AI can do that physicians couldn't do on their own, that are helping people see earlier on that they have a physical problem and can deal with it. That's what's going to happen with AI, is you're going to see improvements continuing to roll through basically all of the sectors in the S&P 500 and indeed all around the world. And you'll really start to see, we think, that productivity push, the big one, probably in and around 2028. But this is definitely revolution, every bit as much as the internet one was. And so I think we could still stay bullish on these names this year, too.
How much of a tailwind would this be, especially for Northeast Asian equity markets, given, of course, our heavy reliance on tech sectors as well, semiconductor exports, and even Chinese equities that perhaps have been discounted a lot now with the pressure that we're seeing in that market?
Well, indeed, the advancements that can be made through AI will go around the whole world. I mean, the United States headquarters a lot of these companies, and so we have the benefit of that, and that's what can be seen in the fact that 35% of the weight of the S&P 500 is just these big tech names. But the advancements that can be made can help these other countries, and to really come out of the funk that they're in. When you speak of China in particular, second largest economy in the whole world, and they've had some really tough times here with their economy, even as they're worried, maybe expecting that the President Trump will slap some more tariffs on them. And so is it any wonder that the first place that Trump will visit as president will be China, and perhaps there can be bilateral agreements that can prevent the tariffs that were to occur, and that can actually help to get their economy back on, back on a growth phase that they haven't been.
Linda Duessel, Senior Equity Strategist at Federated Hermes. Thank you very much for joining us today. Of course, we're discussing the support coming from this AI boom. We have SoftBank at the moment gaining as much as 10%, the most since August, on that AI bet, especially when it comes to U.S. investments. And staying here in Japan, also we're watching the Bank of Japan. Of course, Governor Kazuo Ueda expected to raise interest rates on Friday to the highest level since 2008. The move expected to be a quarter percentage point hike and would be the biggest, as I said, from early 2000s. So what does higher rates mean for Japan's property market? Christine Lee, Head of Research APAC at Knight Frank, joins us now for more on this. Christine, good to have you with us. So higher rates in Japan, something that really Japanese people have not seen in decades. What does that mean for real estate investments?
Thanks for having me. I think in the last 2 years, Japan is the only exception that you still have positive carry for property investments. That has attracted a lot of foreign investors to its shore. And the positive spread is actually narrowing in the last, I would say, 18 months or so because of the demand-supply imbalance. And that's a lot of cap rate compression, easily in the range of 200 basis points. And currently, Japan is an expensive market. I think going forward in 2025, we do see foreigners being more selective in terms of cross-border purchases, especially core assets where the yield is only 2.5%. So with high interest rates, this yield spread is continue to be very thin, which means the financials doesn't really work out for investors. So it might be an interesting time for Japan to see whether the real estate market can continue to be resilient.
This optimism about the Japanese market also bringing in more investments from overseas, also bringing in perhaps high net worth individuals. What is a change that we're expecting to see in the real estate landscape here?
I think in the last 1 year or so, even if investors don't do anything, they can easily get 6 to 7% from their fixed income products. But going forward, it's probably not the case. We have seen banks cutting back on fixed rate, especially the fixed deposit rates. So investors are looking to deploy. And in the Japanese market, I think the concern is also the weaker yen. And then that's also the reason why we are seeing this CPI getting a multiple month high, and that prompted the BOJ to look at raising interest rates. I mean, the market is still very attractive because the positive spread continues to be in the market, but investors are also gravitating towards other markets such as Australia because repricing is really very significant in Australia in the last couple of months, and prices have just started to stabilize. So there might be more upside in other markets.
Would any of that upside be in the Chinese property market? I mean, we know, given the news flow, that they're really lagging behind, that the policies perhaps are not working as fast as they had expected. But are there any pockets of opportunities at this point?
I think for Chinese market, the concern is always when is the bottom, because from the residential perspective, I think it has already stabilized in the first tier cities, but in the lower tier cities, certainly we are still seeing a lot of headwinds in terms of consumer confidence, business confidence coming back to the market, both in the commercial and the residential market. And the cross-border investors are kind of lukewarm towards the Chinese market because they are not sure about the exit strategy, especially with Trump coming to the office. There might be tariffs, and how is it affecting the business sentiments? And we are still seeing occupiers market being quite weak in terms of the vacancy rates. They are hitting multi-year high in the 20% range, which is not very good for property investments. But going ahead, I think in terms of consumer confidence, especially with the Chinese stock market performing relatively quite well over the last 6 months or so, we do see some confidence coming back to the market. Consumers might be spending a bit more, and businesses probably getting more, and hopefully it will stabilize the real estate market. We know there's a lot of concerns over the debt restructuring for some of the developers. So hopefully with more stimulus coming in, that's right. Yeah, hopefully the government will have more stimulus, and then we will see more confidence coming back to the market.
I mean, tell us a little bit of that restructuring and how much progress can be made here, because we have seen Beijing more active with the likes of China Bank. We thought that perhaps this was one company that was too big to fail. But at the same time, going from the mainland to Hong Kong, you're seeing signs of stress with world developers, as New World Development as well.
Yeah, that's right. I think we know that the government doesn't want developers to fail because drawing from the subprime experience, it's going to be catastrophic for the Chinese market. Even for the financial market, banking sector will be hit. A lot of stakeholders in the ecosystem will be hit together with the consumers. So it is really not in the interest of the Chinese government to initiate this collapse, systemic collapse of the real estate sector, which takes up about a quarter of the GDP growth in the past. So the approach, although is a little different from what the US government did in 08-09, they are looking at drip feeding some of these developers. So the slow deflating real estate bubble is causing the struggle for a lot of these players in the market. But we hope that with more policies, incentives, especially coming from the LTV cuts, transaction, stamp duty cuts, and removing all these restrictions. Actually, Chinese as well as Hong Kong market are the most accommodating real estate markets in the world right now, because everywhere else have higher bars for cross-border transactions, foreigners. For example, Singapore, we have 60% ABSD foreigners buying properties in Singapore. So that might incentivize some of the investors holding very long-term view on Hong Kong and China to go back. Yeah.
Christine Lee of Knight Frank, really good to have you with us as we continue to watch the Chinese markets on the lunch break right now, but the Hang Seng Index seeing its worst day in more than 2 weeks. This is Bloomberg.
Well, if the U.S. does impose tariffs, then India will can be a beneficiary of it.
I don't think United States plays any role in supply side or sourcing side. India has a very deep electric mobility component manufacturing base. We are very strong. We are very mature as far as that is concerned.
We want to grow in the U.S., which means you have to invest locally, which means you have to hire locally. First time in many years, the number of students going from India to the US is much higher than any other country, including China. So I think that I can only comment on India. I think we're in a good place.
Indian business leaders at Davos sharing their outlook as President Trump returns to the Oval Office. We also spoke earlier with Paytm founder Vijay Shekhar Sharma at Davos, who says he's optimistic Indian regulators will soon lift restrictions on the banking unit after last year's crackdown. Sharma also discussed Paytm's narrower net loss in the latest quarter.
First of all, I'm happy with the quarterly performance, and I'm definitely happy with what last 6 months or 9-10 months we've seen ourselves recovering to. It definitely was a rough year overall, and I'm very happy with the way the team came together, and we showed up that we can build it even though we had a sort of an air pocket drop, and we did recover. And I do believe that I have committed next quarter is going to be a bit profitable before ESOP cost for sure.
And you're on track for that?
We're on track for that. We probably showed the numbers also.
Okay. Where are you in the journey of the restrictions that RBI imposed on you and you resolving the many concerns that they had? And when do you get free of those restrictions for you to go back to pursuing business as normal?
So first of all, the Paytm business, which is the payments business, significant of them have been reduced or removed, and we are onboarding new customers thanks to RBI's understanding and support there. And I truly want to acknowledge our government and RBI both support there in that process. As far as bank is concerned, which is a separate entity, it is because now we are pretty much arm's length, so it should get sorted out soon, hopefully.
How did we get here, Vijay? This is not what you would have intended to sort of get stuck in the middle of 5, 6, 7 years ago, especially when we first spoke here in Davos. Yeah. Since then, it's been an interesting journey. You went public, all of these regulatory actions against you. How did we get here? What did you do wrong?
I think there was compliance first approach that we should have taken. We probably took customer first approach, technology first approach sort of approach. Now it's a compliance first approach, which is how financial system at large, impactful scale should be taken care. So we've learned our lessons and we've dramatically changed our approach towards the business.
But there were many conflicts of interest as well, Vijay, which would have been apparent to you at first glance, and yet you allowed for them to persist even through your company becoming a public company, right?
Bank was structured in a way that it is owned by company itself, and that inherently is called conflict of interest. So over the period, we probably could have removed board members earlier, etc., etc. Definitely, we did what regulator suggested, and I think we are.
How would you describe what happened? Was it just an ignorance of the rules and the regulations and the repercussions, or was it that at that time you just didn't have enough time to pay attention to all of this, or was it something else altogether?
I think we should have been far more prudent and far more understanding the words that regulator was talking to our compliance officers. I'm speaking on behalf of the bank because I was the chair there.
Yes.
And definitely as a chair, I should have taken care of it much more than what I personally took care.
Paytm founder Vijay Shekhar Sharma speaking with our colleague Menaka Doshi in Davos. The Indian government says it's willing to work with the Trump administration to take back citizens who are living undocumented in the U.S. Let's get more on this with Bloomberg government reporter Sudhi Ranjan Sen. Sudhi, so what's the plan here?
Well, the plan seems to be that India wants to send out a very early message to the Trump administration that it wants to cooperate with the U.S. on undocumented Indians who are there in the U.S. And mind you, illegal migrants or undocumented citizens or people in the United States has been a major issue in the elections, and that which President Trump has reaped good benefits of. So India is trying to kind of send out a very early message that we are willing to work with you. And of course, this is not a new stand to clarify to our viewers, but this is something that India has been doing earlier. But now with the Trump administration, now with the focus on immigration much more than earlier, India wants to kind of start off on a good note with the new administration.
Especially given that they also need to protect those H-1B visas that Indians use a lot.
Exactly, and that is where that's the reasoning that we could in our reporting find out is that India believes that unless and until India works with other governments, especially the United States, in cracking down on undocumented Indians who are there, the ability or the reason why Indian professionals, Indian students would get welcomed abroad is going to reduce. That they're not going to be, may not be as welcome as they are now. So it's kind of looking at India's interest itself that India is trying to do this. And mind you, Prime Minister Modi in the last 10 years has kind of signed labor mobility agreements to help professionals move out of India. To work in foreign countries, and that is also the fact that India is not generating enough jobs for its youth, and the government trying to work out these agreements so that people can go out of India and work. So it's kind of India looking at its own interest.
Sudhi Ranjan Sen, good to have you with us, Bloomberg government reporter there on Indian immigration into the United States. And here's a look at Insight for tomorrow. EFM Asset Management joins us to break down the latest earnings results from SK Hynix as we look out for AI-related guidance from chip makers, plus more market reaction to Trump's second term. This is Bloomberg.